Well, the Federal Reserve injecting $1.5 billion into the economy with promises of making vast sums of short-term loans available. Also talk of a possible further rate cut. Charlie Gasparino broke the news on this yesterday, right before the New York Fed actually announced it.
Started doing it.
So how is this rolling out?
Listen, I'm not on the Federal Reserve Board. I can't tell you exactly what they're thinking. I do talk to people.
Seems like you know what they're thinking before they say it.
Because I talk to people that are plugged in to various policymakers in Washington, and what they're saying is this: the Fed is going to keep injecting liquidity into this market. Now, liquidity into the market does not, deal with the virus fears or the virus contagion, I should say. It's not a fear. It's actually real. But it does help the financial markets, helps with the plumbing. What essentially they're saying now is the Fed has a meeting on Wednesday. Likely not today, but probably Monday or Tuesday, or maybe at the meeting Wednesday, they're going to reduce rates again. The number I hear is take it to zero. That's the number. That doesn't mean I'm just telling you what Fed watchers are telling me. So take the Fed funds rate to zero, and then to enact some sort of plan to deal with QE. Maybe go out and buy Treasury bonds out, buy stuff out, buy bonds, inject liquidity into the system. Those are all obviously they're not going to deal with the root cause of all this, but they do help the market. Right now we have a real problem in the borrowing markets. There's not enough liquidity. People aren't able to lend. If you have that issue, that's really bad for businesses. If businesses can't borrow short term, they can't pay payroll, because usually you don't get all your money at once. Right. You borrow short term to pay people. And so that's why the Fed is doing this. And it also, if you do have these sort of liquidity disruptions, it exacerbates the downward slides in the Dow Jones and other stock markets that we've been seeing. Now, those slides probably are not over. I would just point out. I mean, we have a lot more to go in this. Where the bottom is, I can't tell you. No one can tell you. It has a feeling that it's still. We have some more news to digest on this, on its economic impact. Remember, the reason why this is important, why stocks are moving on this, because traders are trying to figure out how much the decline in GDP from everybody staying home and quarantining and basketball games and baseball games not happening, how much that translates into a decline in corporate earnings. And that's why you have the swings. And so that's where we are right now. I will say one thing about the testing, because I know a little bit about this. As I said, my brother's a doc, runs the ICU at Brooklyn Hospital. One of the reasons why Fauci is a little bit leery about everybody getting a test is you'll get a ton of false positives. Those false positives will translate into people showing up into emergency rooms. That will overload the system. Yeah. So remember,
Dr. Siegel has talked about concerns about ERs getting overloaded. I just have to ask one quick question, though, or at least put all of this in context. Right. We mentioned this yesterday. Banks are far more liquefied, if I can use that phrase, than they were before the 2008
the banks in 2008 crisis. The bank's balance sheet.
That's not the problem.
So let's just be real clear here. In 2008, the bank's balance sheets. The banks were insolvent. Just so you know, they held on their balance sheets mortgage-backed securities that were being marked to market at like 0 or 30 cents on a dollar. Right? Okay. So you don't have that issue now. Now, are banks going to take it on the chin on this? Of course. Lower interest rates mean that banks can't sell products at a decent cost. On top of that, you're going to have bankruptcies in the oil patch. No doubt about this. If you have oil, a lot of people are talking about oil being, where's it trading right now? Do we know? A lot of people, something like $30 a share. It
was above 32 earlier. Okay, so it's just about at 32.
Some people are talking about the print on oil is going to be in the 20s. Yeah. If that happens, you will get oil patch bankruptcies and you will get impacts on the big banks. So remember, that is, I know you're trying to wrap me, but I'm just saying that is the sort of stock market, Wall Street overview that we got going.
I never try to wrap you. It's my producer.
I know, but I'm not exactly.
We got to leave it at that.
I'm not exactly talking. Just blowing
Charlie,
smoke.
we love to hear you. Thank you very much.